now we bust the neckline. So I don't know if we kind of, revisit here before we go back down, but this thing looks like it's starting to go lower. So this is the Dow Jones Industrials, and you rarely see this pattern. So if you join these lows, you join these highs, you join those lows, and you join those highs, you get this little diamond in the rough. And this is a reversal pattern. And you can see that, we're right here, and this would be about 33,500. About 700 points away. So I don't know, we're starting to fail already. And I'm starting to look at the 300s for October. They were about 345. I was hoping we could get a rally and I could get these closer to 250. But this is a formidable pattern. You kind of go up into this thing and it's a reversal pattern. I think that this whole thing has just been a BS rally, and I'm just hoping that we get a bit of a continuation into this week. We're already failing. It's just amazing. I told you last week, it's just, we'll go up all, July, it'll close on the high, and then magically you turn a new month and it starts lower again. So I'm looking at the Qs, I'm looking at a whole bunch of these indexes, and we're at these proverbial inflection points. So this is the Qs, this is the Nasdaq effectively. And, I'm looking at these as the bear patterns. And now we've had this kind of, little thing. And now the question is this a new bottom? Is this something that's sustainable? I don't think so. But at the same time, I kind of talked about this concept where even if you say, okay, it's going to come off, now you got to start clearing through all of this stuff. And so to me, it's got to build a little space. It's got to kind of, look, these things can just, they turn down and then they go very quickly. I think we're still in August. It's still the summer doldrums. And I still think we're going to, probably kick and scream. But I think we're getting very close to these areas of resistance. And so I'm hoping we get one more push. There's a downtrend line that comes in the Qs. And I would love us to get back to 320. It's right around, this resistance line. So I'm hoping that we can get one more push. Now, one of the other instruments I'm looking at is this HYG. So interest rates have come down quite a lot. You got the 10-year sitting at 265. So the question is, does that indicate that we're going into recession? Is inflation coming down? So we're at these just really funky scenarios where, is this a breakout of this ascending? So this is a, we've been watching the S&P and gold go up in this ascending broadening. This is kind of a reverse broadening. And you can see we've kind of broken out here, which actually indicates that, we should go higher. Interest rates should keep going lower, which means that maybe this recession scenario comes on, or maybe the inflation is coming down, so I'm just watching. I would like to see a pullback to this 77 and then, get long. I mean, this thing looks very bearish, which makes the S&P look very bullish, but we're at this, collection area. And I think that we're very close to, so this is the SPXU. It's a inverse ETF, and you can see we're right at this area, this 15 to 15 area. And this tells me that we're very close to turning this around, which means that if this goes up, the S&P will go down. So we're at this very interesting inflection point here, right at this major support level. Now you can see it takes a while to turn a U-boat around. It just doesn't go from down to up. It takes a while. You can see that, it took several kind of things here before this got going. It took, 8 or 10 sessions before this turned around. So I'm just looking for this to be a collection area and see if, this is going to be where, it stops. And then if it starts turning around, means the S&P. So this is a formidable area of support, which means it's a formidable area of resistance for the S&P. But this is still looks pretty bearish, which means the S&P on balance is still strong. I mean, when we see these ascending broadening things, typically, you'd expect it to come back to the beginning of the pattern. If that's the case, the S&P still got higher to go. So I'm just kind of, trying to play an observer here and take some pot shots, where I can. Zoom couldn't get going during the whole rally of last week. Now, I don't know if it's just laying in the reeds and, playing possum and it's going to get going, but it's also in this somewhat of this diamond pattern. Now, these patterns can be also neutral patterns. So we kind of just have to see how we break out of this. So you can see this is also in a bit of this diamond thing. Now, it was up going into this thing, and it could be a neutral pattern where it could break out to the upside in Zoom. And the way I would kind of really play it is just look at these lows. You can see that the last 3 weeks have been very inside range, very small range. So I think this is like 97. And then 2 weeks ago, low was probably around 95. So instead of getting out ahead of it, 93 and 95. So you could put it just a sell stop under 95, because I think if it gets under there, it's going to go lower. I like the euro yen short, and it looks like euro yen looks like it's breaking under this area on the daily. It looks like it's broken out of this neckline of this triple top. So I wanted a short on a rally last night. Doesn't look like it's going to. So it looks like you kind of got this double top head and shoulders now on the euro yen, and now we bust the neckline. So I don't know if we kind of, revisit here before we go back down, but this thing looks like it's starting to go lower. It's just, you got, now all this price history. So the next major support area is 133, but I like this thing short. I am short. I'm making some nice dough here. It really is over. Typically, my whole thing is when volatility starts expanding, it's usually the beginning of the end. So you can see how the volatility is expanded here, how, it's much smaller leading up to this thing, and then you get these big ranges. And that usually, to me, signifies a change. But really, it was kind of, we're in this kind of weird symmetrical pattern. And then I noticed right here, this Eve and Adam double top, where the Eve is multiple attempts at one resistance, and the Adam is, but it's a double top up here. And I kind of saw it early, and now it confirmed last week where it went through this neckline. So the question is, do we kind of, do a little of a retest before we go? But I don't know. This thing looks like it wants to come down. And so I think the next level of support is 132. That's where I would start taking partial profits, somewhere in here. Look for a rebound, and I think it comes right back down to the bottom end of this reverse triangle. This is the IGV, right in this 300 resistance level. You've got this reversal right here. So I don't know. On the weekly, this still looks pretty good. IGV looks like it wants to break out here. So I don't know. It's really picking your spots very well. To me, it's always the same. To me, I always look for the smallest amounts of risks for an acceptable outcome. And so if you can dial something in a very small pocket of risk, to me, it's all about the risk. Where HYG goes, I don't know. But if I can get it somewhere here in the 77s, which was my objective, then I will just give it till the low of today. And so I'm just going to risk a very small amount and roll the dice and see if there's an outcome. And if I lose, I lose. It's, it's pretty minuscule.
So you can see, 45 is 1.3 million.
$1.3 million short.
So pop out a profit for 118,000 there.
So you can see how this is going crazy now. You can see how the market just going nuts.
I bet like $1.6 million on this position. I'm showing right now $23,000 gain.